I saw that the silver deficit now, uh, I think it's been running for 4 years. Annually, it's the size of a Olympic-sized swimming pool. I don't know. I'm still bullish silver. Historically, um, bull markets in gold are usually followed by silver, but this time around, it looks like gold is going on its own. But I still expect silver to catch up with gold. And I don't think I could be wrong, but it's all about probabilities, I guess, in markets. I think we're not going to go that much higher than 100.
Silver has struggled to show meaningful gains despite gold's continued rally to new all-time highs. Traditionally, silver has closely followed the price movements of gold, as both are considered safe haven assets in times of uncertainty. However, this correlation has weakened in recent months, leaving many investors questioning the reasons behind silver's underperformance. While gold has experienced sustained upward momentum, silver has failed to capture the same investor interest, leading to a lag in its price movement. This divergence has prompted some analysts to speculate that silver could be primed for a significant rally, particularly as the broader precious metals market remains strong and the demand for silver in industrial applications continues to rise. Mario Innecco, a senior commodities broker, highlights that despite the challenges in the market, silver's potential for future gains remains strong. Currently priced just below $33 per ounce, Innecco views silver as an attractive investment opportunity. However, he points out that the volatility in the market has driven up the cost of options, making them prohibitively expensive for many traders. Nevertheless, Innecco believes that silver's upside potential is significant, especially considering the current price disparity between gold and silver. While he acknowledges that the gold-to-silver ratio is unlikely to return to historical norms in the short term, he remains confident that silver's price will eventually reflect its true value relative to gold, particularly as the broader precious metals market evolves. Many experts anticipate that silver will see significant price increases in the coming months. Innecco suggests that silver could realistically reach $100 per ounce by the end of the year, representing a potential 40% increase from current levels. With the ongoing momentum in gold prices and the growing recognition of silver's undervaluation, market participants are increasingly bullish on the metal's future. While the gold-to-silver ratio may take longer to return to its historical range, the overall market conditions and silver's price performance relative to gold suggest that the metal is on the cusp of a breakout. Now, we present the clips from Mario's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
This ratio is so high is because central banks buy more gold than silver, and the public, I guess, isn't really involved in the precious metals yet. Maybe a little bit in silver, but it won't make much of a dent. But I saw that the silver deficit now, I think it's been running for 4 years. Annually, it's the size of a Olympic-sized swimming pool. I don't know. I'm still bullish silver. Historically, bull markets in gold are usually followed by silver, but this time around, it looks like gold is going on its own. But I still expect silver to catch up with gold. I don't think I could be wrong, but it's all about probabilities, I guess, in markets. I think we're not going to go that much higher than 100, even though I've seen people like Luke Groman. I think he thinks it's going a lot higher, this ratio, even though he's still bullish silver, but he thinks gold will do much better. And that's why I have both gold and silver, and I try not to sell one for the other. I just try to get out of fiat currencies. You're showing this daily chart with the moving averages. One way to get the market closer to the moving averages, I guess, is for the market to consolidate around a band and not go up or down too much. Yeah, I mean, gold has run up a lot. 2 weeks ago, gold settled at 33, I think 27, the spot price. Last week, yeah, we had a big correction. Uh, we reached 3,500, and then we corrected back down, and we closed at 33.19. So it's actually down only about $8 on the week. So it looks like it's taken a breather, but I personally think that there are a lot of people coming out, people that are not involved in gold, calling tops, and I think actually that's pretty bullish. I mean, unless you trade gold, I don't think you should be concerned if you're buying gold for the long haul. Yeah, just use it as an opportunity to buy more dollar cost average. And I saw there was a headline, I think, or the cover of Barron's has a pile of gold on it, and it says gold rush, and people are saying, "Oh, that's really bad. It's contrarian." But if you look at the little what they say here on the front page, it says below gold rush, it says investors are loading up on the metal as a haven in chaotic times. How long can it last? And I think, yeah, Michael Oliver as well. He read the article, and they're actually they're not pushing for gold. They're saying that it's not a good place to be. So they're actually not contrarian. So that's how I see it. And I like to look as well, Danny, at the monthly chart, if you could bring it up. If you stretch it back as long as you can, yeah, it is bullish, but there's still a lot of room
Right.
up on that chart. And I've looked at this chart, taking the high from 1980 to the high in 2011. And last year, that line was coming around 2,700. So we've broken out of that. So yes, all I would tell people is that hold on to the bull. It's just like in a rodeo, the bull is really wild. You have to hold on to it. You can't fall off the bull. And I think that's how I see the gold market.
Mario Innecco emphasizes that gold's record-breaking surge, fueled by ongoing trade tensions, indicates that the US dollar may be losing its global dominance. As the price of gold surpasses $3,500 per ounce, Mario points out that such behavior is highly unusual, since gold typically doesn't experience these kinds of shifts unless there's a significant change in the financial landscape. He believes this rally marks the end of the US dollar's dominance and predicts that profound changes are on the horizon for Americans, especially regarding their purchasing power. For decades, the dollar's strength has allowed Americans to import cheaper goods, benefiting from its status as the global reserve currency. However, if that status diminishes, particularly with gold gaining value, it could lead to a sharp decline in the purchasing power of Americans, fundamentally altering their economic reality. As the US dollar weakens, gold is emerging as a key asset in a risk-off environment. The US dollar index, which tracks the greenback against a basket of major currencies, has dropped more than 9% since President Trump took office, highlighting the ongoing trend of de-dollarization. Mario observes that currencies like the euro, yen, and pound have strengthened against the dollar recently, with even the Canadian dollar posting gains. Analysts like Tim Waterer suggest that, as long as economic uncertainty remains, gold will continue to be an attractive asset for investors seeking to protect themselves against a weakening dollar.
Well, I guess the tariff situation hasn't helped the dollar, but the dollar index is mainly a basket measuring the dollar versus the European currencies, the yen, the UK currency. There's no yuan or other currencies in there. And it was created back in 1973 at 100, even though it goes back further because they can back date it. And it as I said, started at 100, and we're pretty much at 100, 52 years later. So yes, it does affect the price of gold a little bit, but I think ultimately I wouldn't really put too much weight on the dollar index, because like in 2008, the all-time low, just above a 70, when that happened, gold was at $1,000. And here we are, the dollar index, dollar's gone up and gold is tripled. Mm-hmm. So yeah, that's the way I see the dollar index, but I think it's losing a lot of momentum here. And we could see it go a lot lower. We could see it go towards 80. And I think that would help the Trump administration, would make it much easier on exporting, because that's been the whole problem. The dollar's been too strong. But at the same time, usually the administration says that, any administration says they're for a strong dollar policy, but maybe not this time. A lot of these people in the administration, maybe not so much Bessent, don't understand that if you cut short-term rates, it could actually result in the long-term rates rising, because ever since the Fed cut rates in September, the longer end of the curve has gone up. So yeah, I don't get it either. Trump is kind of he's got really opposite views a lot of times. He wants to fix things, but at the same time, he wants to keep doing what the Fed did in the past, that led to all this problem of unsustainable debt, which is basically artificially low interest rates. So yeah, it's politicians. I know Trump is a businessman, but he's a real estate developer. And I don't think sometimes he understands the consequence of a lot of things that he proposes.
After reaching an all-time high of $3,500 an ounce, gold may not have much more room to rise in the short term, but investors shouldn't expect a significant correction through 2026. Analysts from the World Bank forecast that gold will average $3,250 per ounce this year, reflecting a 36% gain from last year's average, with prices slightly dipping to $3,200 in 2026, a modest 1.5% decline. Despite this slight drop, gold's value remains supported by ongoing economic uncertainties and its role as a safe haven asset. In contrast, silver is expected to maintain robust demand, driven by its industrial uses, particularly in renewable energy technologies and semiconductors. The World Bank expects silver prices to average $33 an ounce this year, a 16.7% increase from last year, with a small rise to $34 in 2026. This outlook is bolstered by silver's dual appeal as both a safe haven asset and a critical input for industrial applications. However, risks from tariffs and broader economic challenges could impact its price trajectory. That's it for today. Share your thoughts on Mario's analysis in the comments section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.